Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from oOh to discuss its first half 2016 results is CEO Brendon Cook. Brendon, welcome back.
Thanks, Carolyn.
Brendon, you've just reported your half-year results for FY16. What were the highlights?
Very pleasing result. Our revenues were up just over 18%. Our EBITDA was up towards 33%. Our NPATA around 35%. And importantly for our shareholders, we are paying an interim dividend of 4 cents, which is up over 42% on last year.
And Brendon, now to performance. You've continued to substantially grow your digital presence and revenue. So how have you managed to achieve this?
Again, that's very pleasing for us. When we went to listing in December 2014, we said we hoped to be between 45 to 50% of our revenue coming from digital assets by 2018. And clearly at the half year, we're just under 45% in 2016. And so we're well on track to beat that position considerably and expect to be there by early in the new year. We've done it a number of ways. We've purchased a business called InLink, which provided us office tower media, which was pleasing to expand our network. We've increased our digital assets across all our other products. And in particular, what is pleasing for us is we presumed the difficult area of digital, which is the road regulatory area, that we would get to 50 signs by 2018. And we're now on track to have those 50 all built by the end of this year, 2016. So again, the combination of the asset creation, adding some new infrastructure and organic growth has been a key driver in achieving our digital growth.
And what about increased inventory and contract extensions?
Again, one of the great strengths of out of home for us as a business is the diversity of our products means we also have a diversity of landlords. And that's important from a risk mitigation area. And we have been able to secure and renew most of our key contracts. We've managed to win some new contracts, including Brisbane Virgin Terminal, Extend Melbourne T4 Terminal. And they are all very pleasing in the way that we approach the structure of the business in terms of the long-term capability.
Now, looking at mobile integration with out-of-home advertising, how has this performed and what sort of trends are you observing here?
Yeah, I think the great thing is that the unmissability of out-of-home matched with mobile is very important. We're seeing a lot of studies worldwide that are confirming this. And for us, we're seeing it ourselves. And we always as a business have seen ourselves as a location business first, and we've developed we're the first out-of-home company in the world to employ editors. We've developed our own online products, and we recently acquired Junkie Media to add to that capability as well. But in terms of the core product of mobile and social, it is really the emerging area that out-of-home strength will be. As mobile grows, as the use of mobility and using online connections outside grows, so will mobile. And that's why we see the Googles, the Facebooks, the Apples, the Samsungs, the media itself, players like Iconic in the online space use the medium because it's a great connector of social, mobile and online connectivity.
As you said, Brendon, oOh has recently entered into an agreement to acquire Junkie Media. So how does this fit with the company's strategy?
One of our core criteria for acquiring a business is, does it extend our audience and does it extend our capability? And Junkie obviously extends audience in terms of the products they have had and their success within the millennial market. But most importantly for us, it's the capability around creativity and being a mobile-first company and a video-first company. And what we'll see over the coming years is that more and more of the ads that you see online will be made at about 5 seconds in length. They will be full motion. They will be soundless first, captioning second, and with sound third. And so that obviously links very strongly into our full motion networks in what we call our walk-by and stand-by environments, shopping centres, airports, office buildings, etc. And so that combination of how we develop content and develop content messages that work with contextually relevant advertising becomes a key driver in how we see the future of out-of-home.
So finally, Brendon, what's your outlook for the second half and what's your focus for the next 12 months?
We're very pleased to be able to reaffirm our guidance of 68 million to 72 million EBITDA. That's pleasing. And we certainly see out-of-home, and it is happening globally, not just here in Australia, will continue to grow as advertisers start to understand the quality of how we've changed the medium, how we've changed the network, and what we can actually deliver with both the digital and the classic out-of-home products. And in reality, This is a trend that's happening globally, and we see Australia as being a key driver, as we have some of the best product already, if not the best in the world, in terms of that expansion of the product across the industry.
Brendon Cook, thanks very much for the update.
Pleasure, Carolyn.